Hi, this is Randy Finney with the right side of the chart, and today is Wednesday, July 20th, 2016. In this video, I wanted to take a look at the steel sector. There's quite a few nice setups, mostly on the short side right now, but it is a mixed bag, so I wouldn't recommend a blanket short on the steel sector. There's a few names that stand out as clearly bearish, and then some charts that actually look okay. So selectivity is the key in this sector right now at this point in time. We've added, so far today, I've added one official trade idea, which I'll cover here shortly. That's Zeus Olympic Steel, I believe. And we'll go over the charts of the sectors here first, and then I'll just run through some of the individual charts that stand out to me, and we'll wrap this video up. Okay, this is one of a few steel sectors we'll look at. This is on TC2000 IX 1130 steel sector, and it's a chart I posted under the Zeus trade setup today. What I see, what stands out to me is a pretty well-defined uptrend line, which up to this point was broken, triggered a pretty healthy correction, but it was only a 2-day sell-off. You can see the two big red candlesticks there, and then prices whipped back right up, back inside, and then put in a divergent high. So I pointed out at the time, when we peaked right here, that we didn't have a divergent high before that breakout. And as most of you know, I put a lot of weighting into these divergences. And so for the first time in quite some time, we have clear negative divergence forming, yet to be confirmed. I want to see that bearish crossover right here with that MACD line going down below the signal line. And you can see the divergence on the RSI. And again, that's what we're looking at for divergence. You look at the peaks here, these prior higher peaks. So far, both the RSI and MACD have put in lower peaks. And again, I like to see that crossover there to just confirm that lower peak. But right now, the indicators are pointing lower, both the RSI and the MACD. So it looks pretty good. And you can see the marginal new high here in prices against that lower high on the MACD and RSI. And so what happened again? Fake out, if you will, or a brief breakdown, snap back up. And I would still, this trend line had so many reactions, I would still give it some validity at this point. And so at least in this one sector, we have a breakdown as of today. And I also wanted to point out the yellow line here is resistance. If you go back to the left of the chart, you can see a few reaction highs here, a few reaction highs here, where the steel sector failed to get above that level, and that's exactly where we failed just recently. So we have not only the potential bearish rising wedge or divergent high, but we also have a failure at a pretty significant resistance level, while quite oversold to boot. Overbought, I'm sorry. We had overbought reading, another overbought, 3 consecutive overbought readings on the RSI here, and that follows a move of roughly, well, up to this point, that's about a 90% rally just year to date in the steel sector. So I think it's safe to say that stocks may have gotten ahead of themselves. All right, so let's look at just a couple more. We'll look at the Dow Jones U.S. Steel Index. Shows a similar picture. Obviously, they're just different components, different weightings, but they all hold steel stocks. And you can see longer term, I have a few more trend lines on this chart here. Here's those divergences I speak about, and they're about as reliable as anything you can find in trading, or at least I find them to be. So at this point, you had a divergent low way back here in the heading into early 2015, late 2014, early 2015, a divergent low clearly marked. That led to a nice trend reversal, decent rally there, from the 180 up to about the 220 level. So you had your bullish trend. And one thing I'm noticing, and the reason I wanted to do this video, is a lot of these individual steel stocks, as well as the sector, trades very well to the technicals. And what I mean by that, you can easily draw these trend lines. They have numerous reactions. This isn't just randomly connecting any 2 or 3 points. You see numerous reactions and then a breakdown. And when you have a breakdown, you see the little initial attempted back test, didn't even make it, and then you have a new downtrend line that began, and that downtrend took us all the way down here to the lows, where once again we had a nice divergent low. You can see the RSI and the MACD down below, divergent low. Prices took out that trend line or falling wedge pattern, back tested it right here, and then boom, this is the current uptrend. So now once again, folks, we've come full circle. Here's a divergent high so far, as again yet to be confirmed, but you can see the MACD already curling down. So at this point, we do have a divergent high, and most, I'm again, this is not in the textbook. I use the term confirmed divergence when I see that bullish crossover. But there's definitely negative divergence, no doubt, because we already have put in a lower peak than this previous high. So this again looks like one large rising wedge pattern. If you exclude this temporary fake out, if you'll call it, false breakdown, and so that's still a trend line to watch. These are all levels here that I think will come into play, besides the trend line, which we may or may not get another reaction since we already had it sliced through. We definitely have some horizontal support there, and this would be my ultimate downside target. I should add one other line for those of you trading the sector. I do definitely see some support there around 195 that is likely to come into play, and ultimately this is about all I'd be looking for in a downside move in the sector. And like I say, I like to, when trading an individual stock, I always keep an eye on the charts of the sector itself. And in this case with steel, as I'm doing here, we have 3 different sectors to look at. And when trading, you try to put the odds in your favor. So if I look at all 3 sectors, if I had a mixed bag on 2 of those 3 and I couldn't make a pretty strong bearish case, I wouldn't really have an interest in shorting it. But the fact that I can look at all 3 sectors here, we'll wrap up with this one here, the ARCA Steel Index. Same story, divergent high, as you can see here, MACD rolling over RSI, prices making a higher high right at resistance. And it's not coincidental that these charts roughly line up with each other again, because they're all different steel stocks within there. Many of the same companies, that is, just different weightings, maybe a few different holdings. And so this one looks to be ready to break down. Now let's go through some individual stocks for those of you looking for trade ideas, because as I said, I don't think it's a I should say my preference would be a blanket short. I do think the whole sector goes down, but I think you can do a lot better picking the most attractive individual names. And we're going to go through these a little different. I usually go through the watch list. I have a related items list right here. I usually start with the largest cap weighted stocks. We'll go with the smallest cap weighted. That way I can touch on Zeus, which is down here towards the top, just in case this video runs a little long and I want to cut it off before I get through the names that I wanted to cover. And I won't go through them all. We'll start here. This one's too small. I'm starting with the smallest cap weighted. This is only a $13 million company and it's trading under $1, so I have no interest to trade that. 64-cent stock, stay away from that. Penny stocks will burn you more often than not. Let's see here. FRD, here's one. You can just see the levels. Easiest thing, my suggestion, I don't have all these levels marked up. In other words, I have to turn it on, put where the level is. If you're interested in any of these, drop me a line in the trading room or via private message, and I can expand on these charts, give you exact levels or a little more detailed opinion. But on this one, and again, the common theme here is a lot of these stocks have trade very well to the technicals. If we look at FRD, Friedman Industries, let's just show you what I see here. What I see is a stock that trades in these trading ranges, and that's why I have these horizontal support and resistance line. There was a nice trading range that went on for months, about half of a year, broke down, and we began a new trading range. Once we broke below that trading range, you can see the selling was very impulsive. Came back up, floundered around, but we've been back inside that trading range now. The top of that trading range formerly was resistance, and it still is resistance, or was. And coincidentally or not, where that resistance came in when we hit the top of that former trading range, we punched just slightly above intraday. It looks like an intraday breakout, and numerous candlestick failures there so far. We also came into this long-term downtrend line. I have to go on TC 2000, flip to a 2-day period chart, so I can go out 4 years instead of the 2 years we were looking at. But look at how well defined this downtrend line is. 1, 2, 3, 4, and now numerous reactions along there. So there's a stock that, depending on how you want to position, you can certainly go long on a breakout of that uptrend line, but you still have this resistance level to get to. Now, once we get up above there, then we're back in this previous trading range, and there's really not a whole lot of resistance all the way up here at about the 694 level. However, we did just put in a divergent high. You'll note these 2 lines here. This forms a bearish rising wedge pattern. We broke down, and we've moved lower. So I would be more concerned. We can also see the MACD now crossing into bearish territory, going below the 0 line here. RSI still pointing down, so I wouldn't have really much of an interest in going long at support. because there's two things as a trader you can do. As a stock falls to a support level, you can either look to position long there for a bounce if you expect that support to hold, or you can prepare for a short entry. I wouldn't do either. Yes, we did break down for that bearish rising wedge, but I'm not crazy about it. But if you do, just set your stops. If you take out that level around 562, maybe wait for a break of 560. This would be a pretty solid support level, 540. It might not sound like much, but a 20-cent drop on a $5.65 stock or 560 is about almost a 4% move. So, not a great swing trade. And again, that's why I'm not putting this one on, and probably, honestly spent too much time talking on this particular stock. But again, the point was to point out how well these steel stocks, a lot of those trade off these support and resistance levels. Here's the next one, SYNL. Looks like a nice downtrend line. We punched above that downtrend line. We had a false breakout here. We punched above it, but there was a little bit of volume, but not a whole lot of follow through so far. So I'm not so crazy about this breakout, and I certainly wouldn't be shorting this one. However, this is a key level to watch there around 737 or so. Probably also draw this one. Let's see how this looks as I'm doing this video. Yeah, there's a nice triangle pattern, almost a symmetrical triangle pattern. So a downside break of that line, as well as that horizontal support. If I'm trading a chart and I have two levels, I have an uptrend line here, as we do, well defined. I should have had that in there before, but it's definitely there now. I wouldn't short on a break of that uptrend line. Reason being because you have a pretty solid, very solid support level here, horizontal support just below there around 737. So to short that, other traders might see this support level and step in and cover shorts or go long there. So you'd want to see both levels go. And if that's the case, I'd be pretty bearish for that stock. And, as far as going long, I'd wait till the sector looks a little better. USAP, again, another nice chart. Well-defined downtrend line, divergent low. This seems to be the common theme. Not so coincidentally, a lot of these steel stocks bottomed when the sector did. I had that divergent low in the sector. So you can see a breakout of a downtrend line. There was an uptrend. We didn't really have divergence at the high, but the MACD is in bearish territory, backtesting that zero line. This is what you want to watch on this one. It's in this descending price channel right now, and an upside break of that would be the next buy signal. I'd have no desire to short that one. So let's move on. Here's one that looks more bullish than bearish. And again, point is there's some mixed bag of charts within the steel sector, and these are all different levels. So easiest way, if I don't mention all these levels, that one's 1130, the next one's at 1266. Just pause the video, replicate the chart on your own, look at the peaks, draw your own trend lines and horizontal lines, look where the reactions are. You can add horizontal lines on your charts. And note that on a daily time frame, I almost always use a log scaling that's down here. Log scaling gives a much more accurate picture, especially when you have stocks with large price moves. In this case, this one's dropped from $40 all the way down to the $7 range in just over a year, and log scaling will tell a much truer picture because it accounts for the differential in the price moves. In other words, every candlestick bar is equated in percentage terms, not dollar terms, because when you have a $40 stock and it moves up or down a dollar, that's a much less significant move than a $1 move on a $10 share price, which is a 10% gain. So if that makes any sense, that's why you want to use log scaling. All right, next one up. ALJJ, I don't see anything there. Let's move on. Okay, here's Zeus. This is the official trade idea put out this morning. And what I like about this one, pretty clean bearish rising wedge, confirmed divergence. You can see the divergence confirmed there. We had that big bearish candlestick yesterday, and we broke down today. I had to run out for an appointment today, and I got the alert as I was walking out the door, and I'm glad I waited, came back in. The stock had rallied back up to backtest. You see this nice doji there right at under that downtrend line, so a perfect backtest. Trade may or may not pan out like any other trade, but it doesn't get much more objective than that. Shorting a breakdown, especially as close to the trend line as you can get, Negative divergence confirmed on the RSI and the MACD. There are your targets. I listed stops. And just to confirm this trade, we look at a weekly chart. We just so happen to fail. Big bullish, look at this big bullish engulfing candlestick so far. Now today is Friday. I'm sorry, today is only Wednesday. Wishful thinking. We have to see how the week closes. Weekly candlestick is still in formation and will be finalized on Friday, but so far it's engulfed, almost engulfed the previous 2 weeks, certainly engulfed the previous week, and that occurred right at the previous reaction high back from late 2013, and that area, couple reactions back then, but this is most important. This is where the stock has failed, so we really haven't been above that level going back for 20 until 2011. So that one made the official list. And again, if you see any of these that you like, just shoot me an email and I'll give you a little more detail where my preferred target or entry would be on any of these. HNH, Handy and Harmon, looks like an ascending triangle pattern. That you have an uptrend line here and a horizontal. I would focus on this horizontal line. You actually have two here. You can see this horizontal level around 2770 has capped a lot of advances, and yet we've had these intraday spikes. So these are patterns I'm noticing. We had a intraday spike, kissed that 2980 level, pulled back. We did it again there, finally broke above and stayed above it. So now this is support here, this 2770, and here's your key resistance. I mean, that would be a breakout if it can solidly break and close above the 2980 level. And ascending triangle patterns are inherently bullish, but they can break either way. So a break of this uptrend line would probably bring that stock down to that $24 level and possibly all the way down to the $20.90-ish, almost $21 level over time. Something to note, any additional kiss of this level here, the 2980 level, either of these previous reaction highs will have put in confirmed divergence here, or we'll put in a divergent high, I should say, because we'll have an equal, all you need is an equal or higher high with the MACD and RSI making lower highs. So that is why I wouldn't be chasing an upside breakout of this pattern right now. Well, that and the fact the sector looks bearish to me, but more importantly, that divergence. So in fact, a little pop above might even make for an objective entry. You take the breakout, which will probably prove to be a false breakout if we get it. You set your stops not too far above, and if it is a false breakout, fewer things in trading are more bearish than failed breakouts. So you'd see a quick reversal and probably a break of that uptrend line and a move down to 2403. So from a risk reward perspective, very, very favorable RR. From a probability trade, trying to short a breakout is certainly aggressive, and you're anticipating that breakout will fail, but again, that's how I trade, so take it for what it's worth. Not sure if I'll add that as an official trade idea because that's pretty aggressive, but may take that one personally if it does that. MTL, big, large, symmetrical triangle. With symmetrical triangles, you get the MACD flattening out, the RSI, so you can't determine anything from that. These things can break either way, and you just have to respect which way they break. So that one's still well within, it's right in the middle of that pattern, so really can't take much from it right now. TMST, I don't see anything there. SCHN, not much. We don't have a divergent high. So far we haven't made a higher high or equal high. There's resistance level. That's really all I see on that chart worth mentioning. IIIN in steel industries, almost, if we just pushed up just a hair, it almost looks like a bull flag right there. Maybe we see a breakout that it has all the appearance of a bull flag breakout. Maybe we match those previous highs or make a marginal new high just like that previous stock I mentioned, and then fail. The negative divergence, the divergences here would keep me from chasing a bull flag breakout or a breakout to new highs in this stock. I'd favor that failing because of those divergences. At the very least, I would pass on it. I might not short it, but I definitely wouldn't take that breakout. Quite stretched on the weekly chart, which I just flipped to here. In fact, this looks to me a lot like a buying climax. You see the surge of volume. Buying climaxes often mark lasting tops. So yeah, I wouldn't chase that one on a breakout. AKS, this one I'm interested. I might. This is a stock I've traded in the past, and may put this as an official trade idea. Again, you can just see trend line breaks. This was a divergent low. This chart's not fully marked up, but I could do the same on the RSI. So you have positive divergence there back then, which led to a trend reversal in AK Steel. Nice rally at that point. That was a previous reaction high, and you can see right where we failed the other day. So you got to look for these previous reaction highs. They often act as support or resistance. There were also some reactions going back to the left of the chart around here, from above. There's a gap. So a pretty significant level, and that's around 592. Maybe call it $6 to be safe, to give it a margin of error. So maybe another thrust. I don't think we'll get it. The sector looks to me like it's started to roll over already, and the next sell signal would be a break of this minor uptrend line. You can see how well AK Steel, you had this large rising, a very steep bearish rising wedge pattern, which was confirmed at that point. It's not drawn out here, but if you follow the crosshairs, the peak in both the RSI down below and the MACD, as well as the price peak above, that was a divergent high. Divergent high number one, correction. So that really should say divergent high number one. This is divergent high number two, and this is divergent high three, if you will. So at that point, you can see prices continue to push higher right there. Made another divergent high. That is drawn out with the little yellow line on the MACD. And a lot like the stock market right now, we're making our third consecutive divergent high, which is really one larger divergent high. From this point right here, prices going on making higher highs against the MACD and the RSI making lower highs. And that forms this sort of wedge type pattern here with this uptrend line and this uptrend line here. So a break of that uptrend line, that's also horizontal support there around $5. And so once that stock takes out $5, it's probably headed down ultimately, before all said and done, to that 380 level. And that'd be a pretty sizable move in AK Steel. Let's see if there's anything on the weekly to mention. Resistance, just long term, you can see all these reactions going back for years. Here, back in 2009, 2011, reactions. So there's a stock quite extended in the near term, and at resistance with divergences in place. SIM, nothing worth mentioning in my opinion. Nothing on CMC. WOR, Worthington, here's a nice ascending price channel. We're at the top of that price channel right now, rolling off it. We don't have any divergence, at least not, maybe some here. You have about flatlining on the RSI. The MACD made a slightly higher high. That doesn't mean that stock can't go down. I just like to see the divergence confirming. We actually had divergence at this point, and we had this crazy rip, just like the stock market did, post-Brexit. And that kind of threw off a lot of these momentum indicators like the MACD and all that. So if you ask me, I do think this one's going lower. I think we can confirm that. Yeah, we can by looking at the weekly chart. Previous reaction high here, failed attempt there at that level. So again, we're really overbought, if you will. This stock so far this year has run up 117%. The RSI is overbought. You can see it in overbought territory. You saw it in overbought territory back here. You see what happened. We pulled back, tried up again, made a lower high, negative divergence on the RSI, and then boom. We were oversold back here for a few weeks, a couple months, and then boom. So that's the thing. You don't mess with these oversold stocks. You don't go long. At least I don't. They may continue to get more oversold, continue to go higher, but you can just play with the chart, go back in time, and all these major peaks, just about all of them came with these with these oversold readings on the weekly RSI, and that seems to be the story with a lot of these steel stocks right now. U.S. Steel, this one I've traded many times. We have a lot of successful trades on the site with U.S. Steel, or maybe not a lot, but the few that we've done have been big monster gainers. I think the last one was a long, actually. We go back to the weekly chart. Yeah, had this long back here that was, I can't remember where the exit was, but that was, I think, over a 50% gainer possibly. I don't know, looking at an entry. The first target was at 21. The last target was at 40. So that alone's a double right there. So we were probably down in the teens somewhere. It's a weekly chart, and again, a stock that just trades very well off the technicals. We've had other trades in the past, long and short, on this stock, and you can just see when it breaks trend lines or these patterns, it has these sharp moves. Goes up in a wedge, breaks down. This was a large bullish falling wedge we traded back here. And, that final target was pretty much marked the top. We just had a little momentum overshoot through it. Came down, we set up, we have this downtrend line, which we broke. There was that meltdown here. And let's see now, back on the daily chart. Same story, divergent high, waiting for that confirmation, but the MACD has started to roll over. So you can see from the yellow line up here that marks the divergent high, and this uptrend line we had, just like the steel sector, a very brief but even a more minor, looks like a 1-2 day breakdown here below the uptrend line. So that's a level to watch, and these are potential support levels. I definitely expect some type of support here around the 1843 level. But ultimately, I think if the sector really gets some downside momentum, I think this one's probably headed down to this $13 level. That one may or may not become a final target. I'm sorry, an official price, official trade idea. Not much here. There's just a big, strong divergent low. There's the rally. I don't see a divergent high. I really don't see any reason to go long or short this one. That's GGB. Okay, here's one this is an international company, non-US. I don't know if this is based in South America. I'd assume that's what it looks like. Just a stock. SID is the ticker symbol here on the US exchanges. And this one just trades very well to the technicals. You look at these trend lines; they're pretty well defined. You can see numerous reactions. We break and we rip. And when this one has an uptrend or downtrend, once in a while it'll trade sideways like it did here, but when it takes out these trend lines, you look at the moves, they're incredible. Sharp, very powerful rallies. It's a low price stock. You got to be careful with this one. It's only $3.19 right now. Steep uptrend lines. When the uptrend lines break, steep downtrends. Sharp uptrends, and this is the last uptrend line. Well, this is what I'd look at. You could even add minor uptrend lines. So again, this is a trader stock. If you're aggressive, nimble trader, just trade these uptrends. And what you want to do is you want to confirm them, probably on the 60-minute charts, confirm your entries and exits. So you can see there's a breakdown, form this larger or less steep uptrend, I should say. And this was a downtrend. Uptrend there, break, very sharp move, and so this is a line to watch right now. And let's see if there's anything. I haven't even looked at the 60-minute chart yet. MACD is not telling me too much. I might have to put up a PPO on this one. When you have these large price moves, the PPO works better than the MACD. It's definitely a divergent high on the MACD because we have from this last peak to current levels slightly lower, and we certainly have divergence as well in the RSI. So this would be your entry, to use a 60-minute chart, replicate this wedge pattern here. You have numerous reactions there, and just set a price alert, which I'm going to do right now. Set alert for break of that, and if you're interested, I don't think I'll add that as an official trade idea. It's just a low price stock. Look at that P ratio, 490. Oof. But if you're interested, let me know and I'll throw out some price targets. I can tell you right now, looking at this chart, this more than likely would be my sole price target. That would be the 244 support. So I'd probably set my buy to cover order around 252 maybe on that one. TX. Nice bearish rising wedge, yet to be confirmed, but so far the MACD appears to be rolling over. You can see the negative divergence. I'm referring to this line, and this line forms this bearish rising wedge pattern, and we're just coming off the top of that now. So you can short it up here, try to ride it down, and ultimately wait for a break. We may have one more reaction on this, we may not. This wedge is, certainly could pop now, or again, it depends on the sector. And since I expect the sector to roll over, I wouldn't expect much of a reaction here on this one. And the targets are pretty well defined. 1788 is support there, so I'd say 1795 or maybe closer to $18 buy to cover. And then the second and final target on that one that's support level at 1673, so maybe 10-15 cents above that for your buy to cover order. RS, Reliance Steel and Aluminum. Looks like a big broadening wedge pattern. ascending broadening wedge pattern, that is. Here was an uptrend line, broke down, prices just continued higher, and we have a big divergence, very steep and sharp divergent high. Looking at the lines here versus the MACD and the RSI, a lot of negative divergence on there, and at the very least, we're about halfway there already, but that's the first target right there. There's some reactions around 78.50. But ultimately, if this bad boy breaks, it's a big pattern. This one's probably going down to, I would give it a final target if things get really ugly with the metals. I'd say around right here, 67.52, and that's just a support. So you want to put your buy to cover order a little bit above that so you don't miss a fill. STLD. Another wedge pattern, divergent high, as you can see here. There's a couple of support levels and targets, 25.11 and ultimately 22.65. And we're almost finished here. We're getting to the larger names here. This is MT. This is a $14.2 billion company. I don't see a whole lot in the charts. I mean, it did put in that strong divergent low back here. You can see the divergent low marked. And really don't have a lot of annotations on this chart. You have these levels to watch. This one just seems to be grinding around in a sideways trading range. I wouldn't go long or short that one. I would just leave it alone. TS, there's a trend line to watch. We had a divergent high right here. Let me show you that. So from this point to this point, prices made a higher high. The MACD and the RSI made lower highs. That was negative divergence. Prices have since rolled over. And this horizontal line is mainly for these three reactions here. There's a couple reactions to the left of the chart, including a gap, second gap, third gap actually. So yeah, that's definitely a level to watch. So if you were short that one, if you get another bounce back up close to that 29.75 level, you could put a short on there with a stop not too far above, or you can wait for a break of this downtrend line and uptrend line. And the first target on that one would be there around 24.92-ish. And then ultimately, this would be my target down here, 22.92. Set your stop, your buy to cover order a little bit above that, but that would be my final target on that one. And two more to go. PKX, nice divergent low. Again, the story with these, just like the mining stocks, I'm looking for near-term pullback lasting for a few weeks to probably a couple months, but longer term, these charts look bullish. These were nice divergent lows, and this one I just don't see a whole lot here. This is a support level to watch. We flirted with it a couple times recently, but I would avoid that one long or short. And finally, Nucor. This is a big one. This is a $18 billion company. Chart looks similar, obviously, to the sector because this is one of the largest holdings. You have this steep uptrend line. You had that temporary breakdown, move back up. I drew this one a little bit different. So basically, you have a breakdown, back test, prices move lower again, and we're back testing what I call a high-level back test. Here, this is that original uptrend line. You can see it connecting these points here and then tested from below. That gives it additional validation. And then finally, when we came back and tested it, we rolled back over, which further validates it because that's another reaction. And we also had, they may have just taken that divergence out. Yeah, they did because the MACD put in just a slightly higher high if you draw like that. We did have divergence on the RSI. And there's other indicators, stochastics and other things you can put up to look at divergence. But, not my favorite, but I do think, if you ask me, I think this one's going down to probably at least this level here, 51.92. All right, that covers it. Those are the ones I wanted to cover. And again, if I see any of these that stand out and really offer objective risk-reward entries or risk-reward ratios, objective entries, I'll go ahead and add those as official trade ideas. But until then, I wanted to get these ideas out there for those of you that might want some unofficial trade ideas. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.